Alright, welcome back to the road to 100,000 portfolio challenge. The challenge where I build a dividend portfolio up to 100,000 euros just to see how quickly I can do if I had to do it all over again. In this case, we will take a look at the position, the big position that is the majority of the portfolio. I have a small position in AGNC as well. However, medical property trust is the main bulk of the portfolio. We will take a look at what it looks like when I build a portfolio. I've done a lot of videos on this stock in the past, talking about the potential bullish scenarios. On the screen right now, you can see the little green dots in the diagram that represents points in time where I added to the position. Right now I have about 9,200 shares. I'm aiming to build this position into 10k shares. After that I will build another position in another company. Let me know down below what dividend stock I should look at. Why am I building a position, a dividend portfolio now? I focus on growth stocks all the time in the past, just building positions in those companies that have the ability to generate wealth faster. Well, if we look from the perspective of having robust finances from a FIRE perspective, so to say, if you run the Monte Carlo simulation, where you take a look at somebody's total assets and what would happen if they retire and use the 4% withdrawal rate, mix it up with a lot of equity, 100%. What cases do you run out of money? Well, those tend to be those simulations where the stock market dives rapidly in the beginning of retirement for the person, and the person has to make sales and do withdrawals from the assets when prices are down. One way to offset this is to mix up the assets a bit and add dividend stocks. So in that case, it's possible to not only do less consumptions, live a bit more frugally, but also collect those dividend and live off of those that will offset the drop in the stock market more and will make it less likely for me to run out of money. So this is a way to build robustness. All right, back to the challenge, back to the position building. As you can see, 9,200 shares at a value of $46,000. About 10k of those are gains. Back in the day, I would buy these in bulk of $1,500 each purchase. Don't ask why. I'm using a bad app. If there's interest on why I'm using the app, I can talk a bit about it, but let's skip that. As you can see, back then I was able to buy almost 500 shares at $3.11. Just a fantastic price, but that was February. MPW recovered, and in March they were trading at $4.34. A bit sad about that. I was not able to load up as many shares. When I started, the yield was 15%. That was just amazing, and now it's dropped down as a result of share price being more expensive. So then $1,000 would net me 230 shares. So I added that to the position. Continuing on, we can see that in April here and May, I also added some. In April, I just bought once again 1,500. This time 360 shares, so not even 400 as the price increased. In May we had a bit of a dividend from MPW. I was able to collect $770. That's after taxes. The US takes a cut and then the Irish government takes a cut. but I just reinvested it all into MPW, building that position, aiming for those 10k. Looks like I will be able to reach it before the stock recovers, so that's nice. And then we see also here May buying for 3,000, getting 671 shares at $4.47. But that was May. June 555, most expensive purchase, only getting 270 shares for that. Back in February I was able to get almost 500, so quite substantially less purchase power now in that case. And then today I also bought for $6,000 more, because today is the X date, and from tomorrow on it will no longer trade with the July dividend. So today is the 10th of June. On the 11th, tomorrow, the stock will trade without the dividend. For those who held shares today, we will get a payment on the 10th of July of 15 cents a share in this case. That's very nice. I'm just building up to 10k shares in this case because my rent is 1,525 euros every month. It's quite nice to get that in dividends for doing nothing every quarter. Is a nice little goal to set up that helps me motivate to save more and set aside money in the portfolio. So that's what it looks like when I'm building. You can see they're just buying over time, just putting aside a small piece of the paycheck and investing it into some dividend stocks. Once again, let me know what dividend stocks I should look at next. Once I'm buying 800 more shares of MPW, I will stop buying this company and I will look to add to, another position to the portfolio. And once I've reached 100k in this portfolio, that's the challenge, I will no longer buy dividend stocks. I will once again return to buying growth stocks. I think that's the most profitable strategy. That's the easiest way to add wealth quickly. That's the highest risk. That's what I should be doing as a 29-year-old if I was doing the most optimal investing strategy. But as I explained in the beginning of the video, the dividend investing is a nice way to add more flexibility. It's a bit of a fun way to save as well. When you've been doing it for more than 10 years, it's important to mix it up a little bit to be able to stay consistent. And then just using the Revolut app in this case, it's not the best one, but you're getting the dividends and I can easily transfer them over to my card and spend them on something fun once I'm done building the portfolio. I will not reinvest dividend then. I will just buy some nice cigars, some nice steak, maybe plane tickets when the quarterly MPW dividend comes in to some European country close to me, or pay my rent or just something like that, spending rather than just saving all the time. It's okay to take the foot off the gas a bit once you're close to 30 and you have a couple of millions in the bank. Then just chill, just live life a bit more. That's been it for this video, and as always, hope you guys make a ton of money whatever investments you decide to make. Take care now. Bye bye.